The S&P 500 is down about 1.5% today, and everyone thinks the sky is falling. Is the market crashing? Are we going to zero? What is going on? Now, it is a very, very simple answer for this insane question. No, the market is not crashing. Maybe we are going down, but it is not going to zero. Now, seasonality wise, every single trader should understand that September and October are the weakest months for the S&P 500 and the broader market as a whole. Now, what this means is that we are going to expect, based off of past history, over 100 years of market data leads us to believe that September and October could be some weak months within SPY. And the reason that we are talking about this and the reason that we are going to focus on this and capitalize on this dip is because November and December are historically some of the better months for the S&P 500. So if we are able to get those entries in by mid to late October and then run those dips all the way back up to all-time highs by November and December, that could be an amazing trading strategy to go ahead and make 30 to 40 to 50% on some of our favorite stocks. Now, a key factor to focus on is some of these April lows. We saw stocks hit April lows down around 50%, and since then they have rallied 100 to 150%, names like Hood, names like Palantir, and names like Oklo. Now, I do believe that we are going to get a similar opportunity. While not as severe, I do think that we can get a 20 to 25% dip in some of these small cap names and about a 10 to 15% dip in some of our bigger names given in Nvidia, Google, AMD, etc. Now, we are going to break this down and talk a little bit about SPY and the broader market. So let's go ahead and jump right into this video and talk a little bit more. Really quickly, before we do jump into the video, make sure you guys are liking and subscribing as always, as it really does help out this channel and growing this community. Talking more about our community, make sure you guys do click that first link in our bio down below. Join up on our free Discord, where you guys can join over 1,000 plus like-minded individuals, much like ourselves, looking to grow within profitability and see higher returns within our portfolios. We all have a common goal, so let's join up and work together. Jumping onto the chart here and taking a look at the S&P 500 on the daily time frame, you guys can see that from these April lows to August highs, we saw about a 35% increase within price. Now, this is an absolute insane rally back from those lows at around $482.70. Now, like I said, I do expect a dip to come, especially after we saw this 35% gain with almost no dips. Our biggest dip was right here at about 4.5% right when this move began. And from there, we rallied up another 20%. And since then, we have not seen a dip larger than 3%. So from here, I am expecting about a dip of around 11.41%, taking us back down to around $575. Now, that is my low. I do think that we can go even lower than that, and I do think that we can head down to around $564.47, all the way down to around $546.42. Now, this is going to be my golden zone right here, and this is where I'm looking for our main bounce to come in. Now, I do think that there is a realm where we do not go this low. I do think that we can come back down and retest prior all-time highs at $609. But if you were asking me personally, I do think that we are going to break through this zone. I do think that we will find a bounce around this $575 zone. Realistically, something between $575 and $590 is what I would look at. But anything under that is going to be an absolute gift. So I am hoping that we do creep down into that golden zone under $565. Now, what we are going to do once the stock does get down to around 565 or lower, anything under $580 is where we are going to be looking to buy a lot of our main holdings within our portfolio. So once price does get down to this $575 level, let's go ahead and draw out a little bit of an animation here. You guys can see if we were to come down to around 609, find some support, come down, break through that, and then inevitably find our way down to this 575 range, I would be looking to buy anything under this $575 range, but I would ideally be looking to see if we can make it down into this golden zone and then bounce right back out and see something kind of like this, which would indicate to us another V-like formation, much like what we saw back here. Now, I do expect this to play out pretty similar, honestly, to what I have drawn out, and I do expect a 20% gain from those lows to the highs that we will see at the end of this year. I do believe that we will see around $690 by the end of 2025. And I do believe that 2026 could see us see $700 and then a larger pullback from there. Now, what I do expect, like I said, $690. While it is ambitious, I am very, very confident in that target. And if we are to get all the way down to our golden zone bottom at $547, I do think that I would press this target back to around January of 2026. But that would indicate about a 26% gain within SPY. Now, like I said, we are expecting that 20% gain, and I do think that that is going to be quite accurate. but nonetheless, anything below that is just going to be a larger gain on the way back up. So either way, this is going to be a very, very bullish dip. This is not a dip to be scared of at all. This is not a dip that you are going to be questioning if the market is crashing. This is a dip that is just a healthy dip within the market because this is what it needs. The market is always going to need a dip, and stocks are not always going to go straight up. This is what you have to convince yourself and remind yourself of during these times where you are seeing, a lot of red within the market. Now, another thing I do want to focus on, guys, is that my portfolio is down. Your portfolio is down. Everybody's portfolio is down. Yes, we can hedge, but for the most part, most people's portfolios are down, and that is okay. That is okay. Understand that everyone is down right now, and this is just simply a dip just to save market health. Now, obviously, once we do get down into the zone, we are going to be buying very, very heavy, and we are currently sitting on around $12,000 in cash that we are looking to deploy within the market during those dips. Now, this is our full outline plan, so let's go ahead and wrap this up and break down our final key notes. I have one more seasonality fact for you guys before I wrap up this video and get out of here, but taking a look at the last 5 years of performance within the S&P 500 during September. During these last 5 years, September has averaged a loss of about 4.2% within the S&P 500. So over the last 5 years, we have averaged a loss of around 4.2% within SPY during September. Now, like I said, I expect a very, very similar playbook to play out. And from there, I do think that October will lead to some consolidation, where we normally see about a 0.7 to 0.12% loss during October. From there, moving into November, where we casually see about a 3.2 to 4.1% gain within the S&P 500. And December is much of the same, seeing about a 1.8 to 2.7% gain within the S&P 500. Now, like I said, I do think that the S&P can return to those highs even though we are looking at a dip upcoming. So please keep your head on a swivel, be smart, understand your risk to reward. And if you guys do need any help with that, please click the link in the bio down below. Join up for free, ask any questions that you need. I am very, very willing to help you guys out. But that is it from me, guys. There's going to be 2 videos on the left and right of me, so make sure you guys do check out the one that is the most interesting to you. And I will see you guys in the next video.